bringing on, we focus on people that are really doing early stage investing, so investing in relatively new startups and providing equity investment, but also that folks that are investing in our region, that have a track record of that are actively soliciting deals in our region as well. We hope this is accessible for you. We want it to be informal and educational. And I really, really want to encourage your questions in the chat box. We devote kind of half the time of this to your questions. So this is a chance for you to ask a question of equity investors in an informal, non-threatening kind of format. We hope you'll take advantage of that. So without further ado, let me introduce my friends Matt Rhodes and Paul Shabika, who are the general partners of 1855 Capital. So Matt and Paul, why don't you give us an overview of the fund?
Thanks, John. I really appreciate the opportunity to talk to this forum this morning and introduce 1855 Capital, a new venture fund headquartered in State College, PA, that's focused on Penn State related startups. Let's start with introducing ourselves. So, Paul, do you want to kind of introduce yourself and a little bit of your background?
Sure. Good morning, everybody. Thanks for being on. I'm basically a technologist that morphed into an investment banker that morphed into a venture capitalist. So spent a good deal of time at the Washington Post, went on to Merrill Lynch, where I was a banker, a technology banker, and ultimately a venture capital, ran a VC fund for Merrill, and then on to the New York Angels, where I was the executive director. So between those two spots, I have about 100 financings under my belt. So as I like to say, I know enough to be dangerous.
And I'm Matt Rhodes, and I'm my career has been in semiconductor and technology management. Basically, I'm a Penn State graduate, graduated here in '79 with a degree in physics and got a couple other degrees, and was a researcher up at MIT Lincoln Laboratory. And then as the semiconductor industry really grew in the 90s, I got an opportunity to grow my career with it. And so the companies and the logos you see there are various semiconductor companies that I've been in management roles. Conexon was a public semiconductor company. It was previously called Rockwell Semiconductor Systems. I was the president of that, and through that did several mergers and acquisitions, probably in the order of 20 or 30. And then the Terranetics was a VC-backed startup in the Bay Area that I was the CEO of. During that tenure, raised about $70 to $80 million for that semiconductor company. And then Semtech is a company I co-founded and is still operating today. So Paul sort of has the background in sort of the pure fund management. I'm more of a technology manager, but I would say I've been on both sides of venture-like deals, and again, maybe in the 30 to 50 range sort of time frame. Paul and I got together over the last year or two and created a fund here in the State College area that really tries to fill a hole in terms of both the central Pennsylvania region and the Penn State community in terms of having an early stage venture fund that is available to our startup community as they bring ideas out of this Penn State community. And I'll talk a little bit about what a Penn State affiliated startup is here soon enough. But what we've done over the last year with a lot of help from the community, and specifically a lot of help from Ben Franklin in terms of making the connections, getting the right people in place, is we've raised, right now we have a $10 million fund, which is our minimum close criteria. We achieved that in March. That is here to make early stage investments in companies that are in our central Pennsylvania and Penn State community. We typically will make individual investments ranging from $100,000 to $500,000, and we expect over the next 5 years to build a portfolio of 20 to 30 companies in which we're invested. It's a Penn State Affinity fund, so we'll talk a little bit more about that. But because Penn State's one of the broadest universities in the country, our focus, if you will, is broad as well. So we really are willing to look pretty much across the board in terms of technologies and sectors. That said, we will have to find expertise, and what we count on is finding expertise either within ourselves or within our Penn State and LP network to be able to assess the viability and competitiveness of any deal we look at. Just to be clear, Penn State, we are not Penn State. We are completely operated independently of Penn State, but we are here in State College, and we work closely with all the folks on the Penn State campus and in the colleges. This is really sort of the concept that we built this around. It really is the case that every opportunity goes through a growing series of growth steps that start typically with an idea, with a small circle that is trying to cultivate that idea, especially in the university environment, building that upon innovation grants and then maybe SBIR funds. And then it kind of climbs the ladder. And, one of the things that we noted is here in the central Pennsylvania region, these early funding sources, once you get past the innovation grants, these are relatively scarce in central Pennsylvania. And that was the premise by which we put this concept together. Venture is not a very transportable resource. I believe that 80% or more of venture capital is applied within 20 miles of the partnership office. So it really is the case that here in central Pennsylvania, it's difficult to even attract funds up from the Philadelphia and the Pittsburgh region. So by domiciling ourselves right in State College, right in the center of the state, we can be there and available and start evaluating things all the way through the central Pennsylvania region, from the down through the Reading area all the way up through the Erie campus and the Barron campus, which is actually where I was yesterday. So it's really trying to fill that gap. And as we fill that gap, we find that we can work with the angels, with Ben Franklin, and essentially build a good, solid ecosystem in central Pennsylvania for our startup community. This is really saying the same thing we said earlier, again, building the portfolio of 20 or so deals. I think that one of the things that we feel is important here is that Penn State is one of the largest universities, has one of the broadest alumni networks. So we do hope that through this fund, we can access and activate the talent of our 700,000 alumni network to bring support and resources to our startup community. The successful startup is all about making the right connections. It's making the connections to the customers, to the markets, to the investors, and to eventually the exit opportunities. And that's a networking opportunity through our alumni. So we're really also hoping to build our affinity network through our LPs and the like. And it is the case that our investors include 40 individual Penn State alumni who are very interested to be helpful and useful to our startups. One of the core questions, of course, is what is a Penn State affiliated startup? And there really is a broad definition within our scope. And that's very conscious on our part. We didn't want to constrain our ability to make investments. So the fact is that we can identify a Penn State affiliated startup that has Penn State IP in it, certainly, and we certainly see several opportunities like that. But Penn State student, faculty, and alumni startups in Pennsylvania, alumni startups that are maybe outside of Pennsylvania today, but maybe want to have some presence here. And then it really allows us to broaden, and we have a great deal of flexibility as to how we interpret the Penn State affiliation. And again, one of the reasons for that is our sole a goal. We are first and foremost a fiduciary for our investors. So if there's a deal that we believe is in the interest of our investors, we will find a Penn State connection. But it is it's a broad swath, if you will. I'm going to stop there. I think that's really where we're at. We're a fund, again, a small fund, $10 million, early stage, $100,000 to $500,000 check size, and really intending to work very closely with Ben Franklin Technology Partners to identify startups that we can help grow and succeed.
Thanks, Matt. That's a great overview and has generated a number of questions on my part. So just to remind our audience, I'll do about 15 minutes here of moderated Q&A, and then be putting your questions in the chat box so that Jill can make sure those get asked, because we want this to benefit you as much as possible. So I always like to kind of start with some of the interesting things in your individual backgrounds. Paul, you mentioned you were at Washington Post for a while, and I've kind of heard you talk in the past about how you watched kind of the analog to digital revolution in media, and you were a big part of doing that for that company. Is there anything that sticks out about that transition and that disruption that you feel kind of applies to today?
I just think they were quite aggressive in terms of what was coming down the pike. They knew that their business was based on analog information, newspapers, magazines, television stations, and radio stations. And in each of those industries, technologies, they always were trying to push the envelope. So I think, if anything, change is constant, especially at these companies. It's ironic that Jeff Bezos now owns the Post, so that tells you something. But was that content is king, and I think it works for some of the larger properties.
Yeah, and we're seeing media still being disrupted around how it's distributed, and but it does definitely seems, if you look at Netflix, that the content providers have a benefit over just people that are strictly a new distribution technology. Matt, so you have deep technology management and executive experience. 25 years on the West Coast with semiconductor companies, lots of acquisitions. You ran a venture-backed fund or a venture-backed company. I wonder what that taught you as far as what you're looking for on the other side of the table in an entrepreneur. You were in high growth, high pressure kinds of positions. What are some of the characteristics that you're looking for from that experience?
Well, it's interesting because, have always been involved in technology and technology companies, and I've often said that we're in the business of creative destruction. We bring new technologies to the marketplace that change the way people do things, and so it's exciting, and you can create a lot of value. So you really do have to see sort of the passion behind what it is you're bringing to the market, and some statement of why it really makes a difference to the marketplace, and then ultimately to yourself, that there's an opportunity to get excited about that. And excitement and passion is really one of the core things that makes this work, because the other side of that coin, all sharp weapons have two edges, and the other side of that is somebody else is creating another technology that whatever you put in is going to be obsoleted pretty quickly in our space. So there's you have to have the excitement also about the environment, about the competitiveness, about the sustainability. So really thinking about how do you sort of have a couple of steps ahead And, you know, very much when somebody's successful, I ask them all the time, so if you were competing against yourself, what would you do to take you out? And why aren't you doing it? Because somebody else probably is.
Interesting. So hope the audience, any entrepreneurs in the audience are ready to answer that question as they raise money. So there's a real educational focus to the time that we have today. And that gets to the nature of this next question, and I'll direct it at Paul. One of the things that we've been so excited about with Ben Franklin as it relates to 1855 Capital is that we have a source of a local lead investor on rounds. So Paul, can you tell us a little bit about what is syndication? When people say, we're going to investors are looking for syndicate partners. What's syndication and why is it important to 1855 Capital?
Well, it's a cornerstone of what our strategy is. Syndication is just being able to put together a formal group of investors to invest as a group in a company. So let's just say I have a company called Blue Widget, and I'm looking to raise $1 million. So maybe 1855 Capital will come out and be the lead investor of the syndicate. We'll put in $200,000. That means there's another $800,000 that we have to go out looking for from various investors, other VC funds. So that's the syndicate, if you will. It's the $1 million round being led by, in this case, it would be us. And it's really
and so
that's as Matt had talked about before, that's the missing link here in terms of funding. It's easy for companies to put together a $250,000 round, maybe from friends and family, different grants. Nearly impossible to put together $1 million round.
Yep, absolutely. And we've seen that time and again. Talk about the role of the local lead as it relates to setting terms of the round. Are you negotiating that and then with the entrepreneur directly, and then sort of that becomes the terms of the round? Talk a little bit about that, and well, why don't we start with that?
Does it matter, Paul? Doesn't, which one?
Go ahead, Paul.
I would say definitely you're the lead negotiator with the company. And, there's several schools of thought, but whenever you want to shop for other syndicate members, they really have to know what the size of the deal is and what the terms of the deal are. So it's incumbent upon the lead investor, in this case would be us, to set the terms. And there are quite a few terms that need to be ironed out before you can start bringing other people on.
Yes.
The size of the round, different, if it's a preferred versus common, it could go on and on. There's a list of probably about 20 different terms that you're responsible for setting.
I just add to it the local nature of it. The fact is that early stage investing is really all about relationships. And so when any investor's writing a check and making an investment, there's a basic trust that you're investing in people who care as much about your money as you do. And you can't get that relationship over the phone. So the idea, really, I think the other part of being local is creating those relationships that allow the investor community to have confidence that there's people and there's trust in the opportunity. So, building that local trust. Building trust is a face-to-face dynamic, and that's why the local nature is so critical in early stage investing.
Understood. And we've also seen that time and again in trying to put together deals. Matt, this one's for you because I know you just lived it. One of the things related to the value that 1855 Capital will create as a local lead is undertaking the due diligence process and producing due diligence that other investors can access, and mean that they don't have to start from zero when they're assessing an investment, that somebody local has taken a look, a deep dive. Without mentioning the company's name, I'm looking right now on my laptop at the report that you did for one of our portfolio companies. You have a kind of a scorecard of 15 different components that you assess the company on, and you have quite a bit of narrative in this report. It's about 18 pages. Can you, from an educational perspective for the folks on the line, can you talk about your due diligence process and what goes into that? What steps do you and the company take to get a good product?
Sure. Yeah, and it's a really important step in the investment process. And to be clear, it's due diligence is the process you go through after pretty much you've decided this is an interesting opportunity, and we have interest and or we think there's a deal that could be made. But it's sort of you always have to be conscious that it's not the things that it's a lot easier to articulate what the value proposition is, what the differentiation is. But there's a reason why 90% of startups fail. It's not because they've got their ideas wrong. It's because the unexpected and or the other things that you haven't been looking at tends to come up and bite you. And so the due diligence process is trying to be thorough in figuring out, is there anything here that we should know about? Are there any rocks buried in the backyard, basically? So the due diligence process is one where you essentially go through a checklist in terms of legal documentation, HR, staff, competitiveness, competitors, and sort of go through a checklist, a formal checklist of all the dimensions of a company, including many times things that the company hasn't yet thought of. And you will always find weaknesses and holes in any company, especially early stage company. And that's not necessarily things that kill the deal. It's just you need to be aware of those. And the fact is that the worst thing you can do is find out about those things after you write the checks, right? I can't tell you the number of times that the real problem you get into is somebody writes a check and then a day later there's a call that says, hey, guess what? And so you really want to be able to go through a series, sort of a formal checklist, walk through, all the dimensions that could affect a company, and see, you should find problems. You should find things missing. And if you haven't completed, you probably haven't done diligence. Now, the fact is, from the company side, they should be prepared, and there's a sort of the creation of a data room that has sort of all the company's formal documents, contracts, formation documents, all those sorts of things. And it's really just making sure that it's all there. And any company that wants investors in there and serious investors in there ought to be prepared with that broad set and spectrum of documentation. And there. And by the way, I think no matter what, it should be helpful to the company, because there should be sort of, hey, here's something that you probably ought to think about. There's a contract that's you've never closed off that contract, and how are you sure that there's no ongoing liability, for example? And just going off and crossing T's and dotting I's on small things can really help a company in its overall presentation to the marketplace.
Just following up on that a little bit, getting into the nuts and bolts. So for the purposes of this due diligence report, how many interactions did you have with the company? Were they face-to-face? Were they phone calls? How long does it take? Set some expectations for entrepreneurs.
It took about a month. I would say that we had the company pitch, we had a deep dive session, we had the company set up a data room. We and the way the 1855 Capital works, by the way, is one of the things, because we're a small fund, we also take advantage of the fact that we are working with a large university. So we get students, graduate students, and the like out of the various business schools to help us put the information together. So when the data room got put in place with all the material there, we had a group of staff basically read every document that was there, and then create a set of questions. And those questions went back to the company team, asked those questions, filled that out, and then turned it into a report that I don't know exactly, John, I think it's somewhere between 15 and 20 page report that walks through all that. And it tries to, kind of be an overview of the company. So it presents the company from sort of a third party perspective, and tries to be objective in terms of strengths and weaknesses and the like. And I think it took us about 4 to 5 weeks to put that all together.
Okay, makes sense. Just to kind of emphasize one of the points that you made, Matt Rhodes and Paul Shubika are the ones making the decision about what gets invested on behalf of your limited partners. We have a graphic up on the screen there that relates to the Penn State focus. But just to emphasize, you guys are deciding what you're going to invest in, and while you'd expect your portfolio will have quite a few opportunities that meet the bullseye graphic there, you'd also probably expect a few deals that you just felt were excellent and may have no connection to 1855 Capital. And that kind of segues into my next question. So you and Paul have crisscrossed central Pennsylvania in a way that few others have in the last 12 to 18 months. You've done numerous road trips to Altoona, Hershey, Lancaster, Erie. You mentioned you were just there yesterday. Of course, you're headquartered in State College. And this is really for both of you. What would you say the state of, you noted that capital is scarce, but what would you say the state of entrepreneurial activity is in Central PA based on all that travel and interaction over the last year or so?
Paul, why don't you start?
Well, I think it's growing. I mean, all you have to do is go down to the launch box and see how many companies have gone through the launch box in the last 12 to 24 months. It's really kind of incredible, I think, from an ecosystem of maybe 3 or 4 years ago where none of that existed. So that's my take for the 10,000 foot view.
Yeah, I'd concur completely. I think that there's sort of people who get it, that this is a real opportunity to make a difference, to explore ideas. I think that the fact is that we're in an environment that has such rapid change associated with it, that the concept of getting a job at a large company and that's going to be your career, people realize that that's just not the reality. So there's a real impetus to bring new ideas and start things up. I would say that on the other side of that, there's a relative, I would say that my view is we have to continue to encourage people to realize it's a big world out there. There's a lot of, you talk to people and they say, I have this idea, and you say, okay, so why do you think that idea is unique? Well, I haven't heard anybody else talk about it. I've surveyed some customers. This is sort of, this is a 1 in 1,000 people would think of this idea. And then you have to remind everybody, look, it's a worldwide market. So if it's 1 in 1,000 people with, 7 to 8 billion people in the world, you got an idea that 100,000 other people probably have. Maybe 1 million people have. So what are you really going to do to make sure that you differentiate yourself, that you go after this in a big way? So sort of the impetus is there. We're getting a lot of opportunity. I think we're really excited about all that. And I think together we have to all make sure that people realize it's a big world out there, and we're going to go impact the world, not just impact our neighborhood sort of thing.
Absolutely, absolutely. Well, I know that we have discussed the state of your pipeline, and I would say it certainly appears chock full of good opportunities. And no doubt that's the low-hanging fruit that has been awaiting a fund like yourself for a while. But it's very exciting to think about the investments that are going to happen over the next year or so as you make your first investments. So Jill, I have a lot more questions, but let me stop there and see what questions we have from the audience.
We have quite a number of questions from the audience, so why don't we ask some of them? All right. Okay. You had mentioned, you talked about this, but let's be, I would just want to make sure that everybody's real clear on this. The question was working with companies from Penn State branches other than University Park. Is it fair to say that if someone has a connection with any of the campuses of Penn State, that fulfills that checklist, that part of the checklist on your among your check boxes? Is that fair to say?
Yeah,
sure.
Yeah, absolutely. And that campus can be world campus, and that campus can be the campus of life. But
okay.
It really is the case that it's absolutely all the campuses are part of our Penn State community.
Thanks. Another question came, how early is early? Does the company already have to have a product ready to sell or sales?
So certainly we look at things that are pre-sales. There has to be clear understanding, differentiation, and the like. I wouldn't say that there's we're an early stage company, so we are definitely looking at some things that are pre-sales. It is the case that somehow, though, there has to be some validation of the need and the relevance of a solution to that need. And of course, the easy way to demonstrate that is customers, and customers who are willing to risk their own money to go after that. So yes, we definitely will look at things pre-sales, but have to have clear validation of the concept.
Okay, thanks. And this may be something the 1855 guys or John may want to jump in on. How does 1855 differ from Ben Franklin?
Matt, you want me to opine on that, and then yeah, why don't you start, John, and then we'll build on top of what you have to say.
Yeah, so I think the way that I would phrase it, and Matt, I don't know if your latter graphic is immediately available, but I think that's kind of the nicest representation of kind of the difference. So I think the best way for 1855 Capital to benefit its limited partners is to take advantage of the de-risking process that Ben Franklin seeks to do for all investors of the companies that are in its portfolio. So as Matt and Paul know, typically we are working with a company for about 2 to 3 years. Usually we're the first outside investor, and we're making milestone investments of, let's just call it 100,000, and we might make 3 of those, and maybe gets up to $500,000. But then we also have a lot of management consulting and augmentation that we bring to things like human resources, marketing, finance, accounting, strategy, sector expertise. And so why wouldn't any angel investor, VC, let the de-risking process mature as much as possible And then when we've kind of gone as far as we can go, that's a great place to pick up. And there are some live examples of that that 1855 is looking closely at. Some companies that are on the mature end of our portfolio, and we've sort of gone the distance we can go with them. And hopefully we've done our job and helped to get the company to a place where it's interesting to investors. So Matt and Paul, I don't know if I did that correctly, but please jump in.
No, I think you kind of set it up for us, really. Ben Franklin typically does debt, or versus what we're looking for is more equity. So I think that's the other difference. Matt, you want to?
Yeah, that's right. I mean, it kind of relates back to the earlier questions. We invest in pre-revenue companies. We look at them, but we also have the opportunity to say, hey, maybe why don't you get a little more market validation? Why don't you take advantage of some of the things that Ben Franklin can do for you, and we get to help mature that. So maybe we take, maybe even there we do a small position. So Ben Franklin's a little earlier than us. Ben Franklin takes risks for different reasons, but Ben Franklin also can bring some resources in terms of staff help and the like. And all those things tend to mature companies into a more viable investment for us. And as Paul says, we're much more interested in being an equity investor and a partner with the company. And so the company has to mature and to the point where they really can understand the value that we can bring, and we can understand exactly how they can have a long-term value proposition in the marketplace.
Okay, thanks. Next question. Do you have some particularly desired deal structure? Do you prefer convertible debt or preferred stock, or do you have any? Can you make any comments on any terms that you normally are looking at?
So I'll take that. We're as Paul said, we're equity. We want to be an equity investor. We want to be somewhere on the cap table as an owner of the deal. We want that to be something. Typically, we would be interested in preferred stock and pretty traditional early stage equity investing type of thing. Preferred stock means that we have ownership position, but the preferences are typically things of liquidation preferences for downside protection, wherein if there's money coming out, the first money comes back to the money that has gone in. So I would say that it's our strong preferences for equity, and we would typically want that to be in the form of preferred stock.
Okay, thanks. The next question. How long does the due diligence process take from a VC's perspective on, say, $1 million round? And how much longer does it take if you are syndicating with other investors?
Well, I think it's 4 to 6 weeks you can do it. And I don't know, in terms of syndicating it, the other investors, they take advantage of the work that we've done. We typically put a book together and they have access. So I don't think they impede it as much as however long it takes them to go through our diligence material.
Okay. Next question.
Joe, let me just add to that. I would say from the company's perspective, just remember that it's a relationship that you're building for an investment. So you should be always working to create those relationships months before you expect to close a round. It takes longer than you would think, and it's always about building relationships. But if the relationship's there, again, due diligence is the formality at the end of the process, not the start of the process.
Right, thanks. The due diligence report that is delivered, that you make available to other potential co-investors, Do you also make that information available to the company you're considering investing in, or do you maintain that as confidential information?
No, it's actually reviewed with the company.
Okay, great. The checklist, the due diligence checklist that you mentioned, is that something that's generally available, or can you make that available that we could share with any of the participants who are interested, or is that something that you can generally find those kinds of questions online, or
But that's the kind of thing you just do a due diligence checklist, Google, and you'll find there's 100 of them out there,
okay.
and so various levels of detail, various levels of outline and the like. But again, it tends to be relatively pedantic stuff. Where's the formation? Where's the formation documents? Is the C corp, is it an S corp? Is the were the taxes filed last year? Sort of this long checklist of detailed stuff, along with more conceptual and strategic stuff. Competitors, competitive competitive matrix, customer. One of the most difficult things often is that as an investor, you'd like to talk to at least one or two customers, and obviously customer relationships are often sensitive. So but finding a checklist is pretty easy out there online.
Okay, good. Could you comment a little bit on the role that early stage investors play on corporate governance, and specifically what your fund is interested in looking at, including taking board seats?
Go ahead, Paul.
I didn't hear the last. Sorry.
Yeah, so it was really in terms of corporate governance. So if we are a lead in a round, you can expect us to ask for a board seat. It is the case that in early stage companies, actually corporate governance is typically one of the challenges, that it's really not been put in place. It's sort of informal informal governance, right? You have the founders meet, talk, maybe they have an early investor who is a significant mentor and the like. But remember, we're trying to take companies that are valued in millions and taking them up to valued in the tens of millions of dollars. And when you have a company that's valued in tens of millions of dollars, there's a full expectation of, corporate governance, a board, compensation committees on the board, sort of review, audit, all the types of things that are really going to be important. Because again, if you as an entrepreneur expect to exit at some point to a existing company, that company is going to want to see audited financials. They're going to want to see board meeting minutes from the last 4 or 5 years. They're going to want to see all that sort of documentation that shows that you're operating at the level that they would expect when they make you a part of their company.
Okay, thanks. Can you talked about your preferences of deals, as they relate to somewhere along the line with Penn State. Can you talk a little bit about, and also that you talked about Pennsylvania companies. Can you also talk about what, if any, preferences you may have for industry sector?
What do you want to talk? Yeah.
Well, I think preferences for industry, Matt has his semiconductor materials background, physics background. My background is in media and software. Medical devices, we would reach out to our LP community to find out about, diligence on a particular company that's doing a new type of laser surgery, for example. So I don't know if that answers your question or not, Joe.
And just adding to that, yes, as Paul says, Paul and I have certain expertise and background that make us that certain deals will sort of resonate with us personally. I think that here in the Central Pennsylvania region, certainly in university community, software deals tend to be much more interesting because there you can focus on the the concept, and the software can come together. Here in Central Pennsylvania region, ag tech is an area where I think we can differentiate and bring that to the broader market. And then because we're a small fund, you know, as you start getting into the therapeutics, diagnostics, you know, kind of therapeutics are probably just unreachable from the size of fund we are. Diagnostics are kind of at the next step down, a little closer maybe. And then medical devices, something that, you know, we think that there's going to be some real opportunities, but we're going to be reaching out to our LP network to help us evaluate those.
Okay, can you just you've used the word data room, and some of our participants are not entirely certain that they're on the same page as you are as to what that physically means, because they've heard it being described in other ways by other people. So if you could just describe what you think of when you say the term data room.
Let me start with that, because the reason the term comes around is if you did a public company to a public company transaction, you actually set up a data room, and it's a locked room that's filled with every document that's there, and you have to walk into that room. Now the good news is we're in a digital world these days, so a data room typically takes the form of a Dropbox file system, and that you have all the documents that are of relevance to the company in that one place. Typically, and you can go out and find products these days to have data rooms, but you know, things like Dropbox and Google Drive serve the function in most cases. But you do, you know, depending on the level of proprietary and documents that you have, you know, you want that those documents that are in there are going to be sensitive documents. So you want to be able to control access, and depending on the level of sophistication of what you use for a digital data room, you actually want to have tracing of access in terms of, you know, who's logged in, who's looked at what document, you know, those sorts of things. So it's at the highest level, it's simply a place. In the case of the digital world, it's a place you can log into and get access to the data of relevance.
Okay, thanks. When you're looking at these young companies, what is your expectation about the level of management experience within the management team? Do you have to see some gray hair, or what is your expectation in that regard?
I think it all depends, but in general, I think these companies are pretty young, and the people who are driving them are great product managers. But at some point, if you really want to scale the company, you're probably going to go outside and bring in some senior management. And I think that's a hard thing a lot of times for entrepreneurs to get used to.
Yeah, and just adding to that, I think that, you know, as Paul says, the real answer is it depends. I think that one thing is, you know, the sole entrepreneur is very difficult to invest in. There's still buses out there and things happen to individuals. So that there's a team is really important, that there's some breadth in the team, that there's some complementary skill sets, and they're building upon each other, because that shows the ability to scale, because it's sort of a mindset then that, you know, that they can add more to the team, and there's some ability to use the best of other people. And then, you know, in terms of youth versus experience, I don't know if that's the right set of words, but there are certain areas where experience matters a lot. Software is one where, you know, young teams can be very effective, because, you know, software is always changing. As you get more and more into hardware or other types of things, experience matters a great deal. It's what, you know, it's knowing what you know and knowing what you don't know, and experience is the only way to get there. And so as it goes back to the original answer that Paul said, it depends, but I would say that team's really important in that part of it, that there's a well filled out sort of team around the idea.
Okay. You mentioned earlier that your pipeline of companies that you're potentially looking at is pretty full. So what does that mean? How does that look as competition for the people who are on the call this morning, looking for capital? What if they're interested in talking to you? What puts them higher on your list? Or is it you just go through, you keep on going through and check them off or scratch them off and just keep on going down the list? How do you look at that?
Good.
Well, I mean, I keep it pretty simple. I believe there are I follow the 4 Ps in terms of ranking companies. Does the company have a product? Is it a product that people need? Is it ready to go? The people on the team, the people in the company, how do they stack up? There's got to be passion. There's got to really be, you have to feel that these companies, these people, these entrepreneurs are really passionate about what they're doing. And is there a road to profitability? I mean, at some point, is this a business or is it just a product? And then you just kind of fill in from there.
Yeah, and I would say that it's important. Again, I'll go back to the fact that investing is a relationship of trust, and that trust isn't built by sending in a PowerPoint at the end of the day. So so first of all, send in the PowerPoints. Figure out, and we'll be setting up more of a formal place where you can sort of apply to 1855 Capital. But I will tell you that, and most venture guys will tell you this, that there's very few deals that get done through the incoming on the email sort of thing. It's a relationship, it's a reference and hearing about it. So, figure out ways to get to meet us, figure out places that we can talk. It's really, we invest in the idea, but more than that, we invest in the people. And so getting to know the people again, I'll go back to, if you expect funding sometime in 2018, you probably want to have met the funding source sometime in 2017.
Okay. One final question, because we are coming up on our 10:30 end time, is besides the affinity to Penn State, how is 1855 different from other early stage VCs?
Yeah, so I think that's again, one of the things that we have, our job is to really work on that in terms of creating this, this network, this affinity network. Success, again, in early stage companies is really all about getting the connections to the things that can make you successful, which is resources, markets, customers, strategic partners, etc. Really trying to activate the Penn State Alumni Network and Penn State Network overall to create a belief, a special pipeline for our deals, if you will. That's our opportunity. So our expectation is you're not working with 1855 Capital just because of our money. Money's all the same color. Hopefully we can bring value by bringing resources, connections, and other opportunities that might not otherwise be accessible in central Pennsylvania.
Okay. We are about at the end of our time for this morning. As I mentioned, we have been recording this session, and I will be sending out the link to everyone. One question for Matt and Paul. I am quite sure that there are probably some people on this call today who would love to start communicating with you. How would you prefer that they do that? Should they send an email to me or to John, or should they email you, one of the two of you directly? Or how do you prefer that they do that?
We're easily accessible. Matt at 1855capital.com or Paul at 1855capital.com. And so we try and be responsive, but that's we're easy to find and should be easy to connect to.
Okay. Well, that's all I have. John, if you had any final comments or thoughts?
Yeah, first I just want to thank Matt and Paul for your time, for being willing to be a part of this, and for your thoughtful responses. We are all really excited about what you bring to Central Pennsylvania, and we look forward to productively working with you. The final thing I'll say, just to wrap up, is product, people, passion, profitability. I think that's a really nice summary that you offered us, Paul. And if that's a summary of the hour, that's not bad. So thanks again, guys.
Thank you, everybody. Really
Thank you.
appreciate it. And thanks again to Ben Franklin for everything they do to make a viable investment environment in Central Pennsylvania.
All right. Thank you, everyone, and enjoy the rest of your day. And you will be receiving an email from me probably later in the day with the link to the recording. So once again, thank you, and we will see you. We will see you for the next capital call, and have a wonderful holiday. Thanks.